Okay, everyone, welcome back to the Liquid FX YouTube channel. Here we're going to be going over a very simple fair value gap strategy that people can employ into the market. So, a lot of people have been asking me, how can I actually use some of the key concepts of ICT in a very simplistic and systematic way, right? So, in this video, we're going to be breaking down some concepts, right? So, the main concept will be the fair value gap, right? Now, the most important thing to understand with a fair value gap is that you cannot use it in isolation, meaning that you need to use it in conjunction with a few other concepts, right? So, what are those other concepts? We're going to be looking at fair value gaps in the context of supply and demand. And we're going to be understanding what supply and demand zones actually are. We're going to be pairing these in with liquidity, if I can spell that. So liquidity, and we're also going to be looking at market structure as a whole, looking at the highs and the lows, right? So this or these things with fair value gaps paired in with liquidity and structure is quite literally all you need to trade any particular market, be it forex, futures, options, indices, even crypto as well, right? This is universal across every single type of trading asset class, right? Be it forex or anything else, right? So this is again my favorite pair, the Euro USD. Let's quickly head up to the 4 hour time frame and see what we have over here. So the 4 hour time frame is very interesting from a liquidity standpoint. What we have is we have the previous high over here. So this is the previous structural high I had marked out. So as you can see, this structural high has been broken, right? So we are above an old high. So when we're above an old high, as we know from basic kind of market structure, when we're above an old high, we often see price break a high, then we see price pull back. Then we see it break a high, then we see price pull back. Then we see price break a high again, right? And then we see somewhat of a pullback. So we're now in this region kind of over here, right? So this is where we are now. This is where we are now. And this price action corresponds to over here, right? So we are in a valid area where we could be looking for sells. And this is essentially a sell case study breakdown that I'm going to be going over. Just a quick 4 hour outlook. So what we had over here, very interesting. We had some liquidity over here, massive trend line liquidity. This was NFP from August, right? So NFP from August really drove price higher, and now we've had August. We had the last week being pretty slow, nothing too extravagant, nothing too crazy. So what we have over here is when we're above an old high, we look for potential sells, right? So when we're above an old high, we look for potential sells. And so I do think price could come as low as the region of 1.08147 just to fill this fair value gap over here. But let's now go over the strategy, right? Let's go over the fair value gap strategy itself, right? So from here now, let's just replay price. So if we look at Monday's price action, Monday we had a bullish day, right? So Monday we really pushed up and we actually broke the 4 hour high, as you can see. Monday gave us this price action. So what I want people to understand now is you want to ask yourself, what is the area of demand? This is where fair value gaps come in, right? So this is a fair value gap over here, right? And so this fair value gap led to a structural break over here, an internal structural break, right? So this now becomes the demand zone. So this is the demand zone. So we're looking at price as it comes into this demand zone, right? So this is now a bit of hindsight. But essentially, this demand zone was actually broken in the Asian session, or just, I believe it was just after the Asian session. Yep, in the Asian session. So we eventually see the demand zone actually get broken, right? So there we go. Now we see the demand zone get broken. Okay, so a couple of things to understand right from this perspective, right? So again, weekly opening. Here's a quick tip for everyone. The weekly opening is over here. What I like to do is I like to draw a line and extend it to the right. This is our weekly opening. So I'm just going to write WO for short. This is our weekly opening. And the hack here, the tip is to look for sells, to look for fair value gaps above the weekly opening to sell from. And this is exactly what I mean by that. So this is now Tuesday's price action. And I'm going to confirm as well, this was quite a rangy week, not my favorite type of week to be trading, if I'm honest, right? So this is now Tuesday's price action. So Tuesday, the thing I want people to understand is that what we've had is we've had a flip. So this demand zone over here had a reaction, as you can see. So price actually doesn't initially respect this zone. It comes in and fails, right? So Tuesday gave us that flip from from demand to supply, right? So from here now, what I'm looking at is I'm looking in the London session, right? So that's 7 to 10 UK time. And I'm simply using this fair value gap over here. So this is an inefficiency that we've seen, this fair value gap over here, this inefficiency. Just going to draw that over here to the left, right? So why am I drawing it over here to the left? And why is this an A plus entry, right? So despite having a rangy week, I want people to understand that the market itself, when we use fair value gaps, right? This is a fair value gap, but this is an A plus fair value gap. And I'm going to explain why this is an A plus fair value gap, okay? So let's continue to play price on and see how the week actually behaved, right? So again, understand number one, don't forget this line over here. This is the weekly opening, the most powerful concept in trading itself, the weekly opening. So this is what I want people to understand. So now we're in Wednesday's price action, okay? So this is Wednesday's price action over here, right? So there's a couple of things I want people to understand. We have Monday's low down here, we have Tuesday's low, and we have Wednesday's low. So we got some external, I guess you can call it external range liquidity. We have some trendline liquidity building over here. Now, the major pool of liquidity I want people to understand is we have an inefficiency over here. So this is the first thing. This is where the fair value gaps become very powerful to understand. We have a fair value gap over here. We've seen price break structure to the downside, and what I mean by breaking structure is that we've had a minor shift over here. So this is the most recent local low that produced a local high. So we've had a shift in the market structure over here. Price has given us that shift of market structure. Price has given us that fair value gap, right? Now, the next thing I want people to understand is liquidity, right? And understanding liquidity from a very powerful perspective. So we have liquidity to target. But when you have a fair value gap, you want to potentially key off, like this gray one over here I marked out. What you want to do is you want to look for price to sweep previous day high. So this is the Wednesday previous day high. And this is what validates this fair value gap. It is as simple as that. I want people to understand it is literally as simple as that. Take a previous day high or previous day low. In this case, the previous day high as we're looking to sell. So what you want to sell above a previous daily high, keying off a fair value gap in line with where you want to trade. Again, remember from the 4 hour, we're looking for sells. So this is what makes this fair value gap an area to sell from. So this fair value gap becomes valid, right? Just over here. Now, stop loss, you can have it essentially. I prefer to have slightly wider stop losses, but again, 1 to 2 to 1 to 3 is fine. And what you're doing is you're targeting the low, i.e. from the previous day high. So you swept the previous day high. So you're targeting the previous day low. So that's Wednesday's low in this case. That's a 2.3, sorry, a 2.37 hour trade. You also have Tuesday's low, which gives you a 2.5 hour trade. And you have Monday's low again, which gives you a 3.2 hour trade, right? So again, a comfortable place for me will be to target that Tuesday's low, right? As this is Tuesday's fair value gap, right? So again, a 2.5 hour trade, this is really easy. These strategies are really easy to understand and implement, right? So again, price does eventually tap in. The only thing I want people to understand is that we did actually have the news that really pushed things down. We had some news event over here which pushed things down. And we also had another re-entry over here, right? And the second re-entry was just over here. Now we saw price again breaking structure, so we swept the Asian range high, we've mitigated this fair value gap, and we've respected it. This was our shifter market structure. This was the second Thursday shifter market structure. And we have a fair value gap just over here, right? So this was potentially our second entry. So let's just play price on again and see, right? So what we had is we had price sweeping the Asian range high, followed by price eventually going and breaking structure. So number one, we've entered off here. So this is one sell position again. This is one sell position targeting the previous day low. That's one sell position. Now the second sell position is understanding that we have a fair value gap just over here, right? So we had a structural break and we had a fair value gap just over here. So again, stop loss again just above the wicks over here. Here's one entry, here's another entry. Again, targeting the exact same level for a 1 to 5 hour trade, 1 to 2.5 hour trade. So once you have that in place, you can see how both our entries eventually played out to TP, right? So what you want to understand, what I want people to take away from this very basic video is fair value gaps work, right? Fair value gaps essentially represent areas of supply and demand, right? So fair value gaps represent areas of supply and demand. And what you're looking to do is you're looking for valid structural breaks, valid structural market shifts is the first thing. And the second thing you're looking for is you're looking for liquidity to sweep. So liquidity has to be available in two places, to sweep and to target, right? So you're looking for liquidity to sweep. So that's the previous day high. And you're looking to target this trend line liquidity. But the thing with trend line liquidity is that it's very often previous day low from Monday, Tuesday, and Wednesday. Okay, so these are the things I want people to understand, right? So again, if you want more of these videos, just please let me know. We also have some free mentorship at Liquid FX. So we have a summer sale going on. Use the code MECHANICAL for 30% off. Free Discord, free trade plan, everything's available, link in description. And I look forward to seeing all of you in the next one.